Everything's running a bit slow today. Something is a little temperamental, but thank you all for coming. I try and address as many questions as I possibly can. This one's been coming in a lot this year, especially over the last week because of a certain reason which we'll get into as well. The question is ETH dead? And I'm not an ETH hater. ETH made me a lot of money. ETH was the second crypto I ever bought in my life. I was in Bitcoin from 2017. I didn't buy ETH till one day in March 2020. I bought it all at once. Boom, done. And I'm very grateful to that. But sometimes certain things don't last forever. And sometimes there is a thing called tech debt and age effect and everything else. I'm going to break it all down, but there's some very interesting strategic moves now being made by Ethereum that we're going to dig into. So again, please don't take this the wrong way. And it'll look like a Solana video, but really it's a SOL versus ETH versus SOL video. Let's go. Thank you as well to TND Tesla and Sean Donnelly for being here. And then we have so much Tesla news. I'm going to have to do the Tesla update tomorrow. We'll dig into what it all means, break it all down, and how good it is and how good the future is. But before, we have to tackle this question. And the inspiration from this, not only from Sanjay, who got it to me, but from this guy, Justin Bonds. Now, he's the founder and chief investment officer at Cyber Capital. He knows crypto. He's been in crypto since 2012. I think he's a Kiwi, so shout out to any Kiwis out there. And he studied philosophy, I think, in Auckland. And he's now a full-time cryptocurrency researcher and a voting member in Bitcoin Unlimited. Alex Rogan, friend of Joe Rogan, thank you for being here. So this is the inspiration. He basically put together an 18-point diatribe. And at the very end, I underlined a couple of red parts here. One is no longer a question of tech, but of will, as we can scale the L1. As MegaETH will ironically prove alongside countless other L1s, the people in charge of ETH are unwilling to upgrade its capacity. That is the bottom line, leaving ETH behind in the dustbin of history. Dustbin is a garbage can. I think it's, and if people were wondering, maybe a small little dustbin. It's rubbish can, garbage can, dustbin, whatever you want to call it. So I decided to dig into this and break it all down. So I pulled out 8 key points that I believe is my interpretation of what Justin was getting at. And there are, for me, 8 big issues for Ethereum. And I'll break them down one by one, but the quick short list is commitment to layer 2 scaling, technologies like MegaETH, impact of not scaling the layer 1, FDA, which is flawed data availability from the DA, the data availability layer, potential abandonment of L2 ecosystems, focus on long-term solutions, innovation on layer 2, and centralized decision-making and lack of on-chain governance. Again, we're going to go through these very quickly. Then we're going to do an updated face-off, which I haven't done since 2023. The first time I did, maybe not the first time, but definitely the big one from 2023. And we're going to break down all of the data. And then we'll get to my conclusion at the end. Number 1, is ETH dead? And number 2, which will perform better? So that's kind of, I'm all about being on the fastest horse. I don't care what it is. It just has to perform better. So that's kind of my thing. And I like disruption. And that's why I like these 2 assets. But first, let's get into the list. The first part is the commitment to layer 2 scaling. The ETH core developers firmly committed to layer 2 scaling solutions which operate on top of the existing Ethereum blockchain. The decision means they are not, I repeat, they are not focusing on implementing scaling improvements at the layer 1 level. And by prioritizing layer 2 solutions, which aim to enhance transaction throughput and reduce fees without changing or modifying the base layer, the developers believe they can maintain the security and decentralization of Ethereum mainnet. However, this approach has led to some criticisms that the L1 is being neglected, potentially hindering its competitive edge as a layer 1 blockchain. So when I think about this, and if you know this channel, I think layer 2s are band-aids. It doesn't solve the core problem. But if you look at the core L1, that is Ethereum, it is bloody robust. It doesn't miss a trick. Always works. Very dependable. Very good security. But it goes back to the age-old thing. Can you change the wings of a plane when it's in the air? And the answer is, from this, I think Vitalik and the team believe maybe they can't. Therefore, they are focusing all of their investment onto layer 2s to help ETH scale. But that comes with different problems, which I'll talk about in a minute. Let's get to number 2. And shout out to anybody who knows this album cover in the past, MegaETH. But they have a thing called MegaETH. And no, I like music, but I'm not a MegaETH fan, never was. But let's move on from here. I just thought it was very similar. Now, technologies like MegaETH, this is technically, all the stuff I read, it has the potential to scale Ethereum to over 100,000 transactions per second. This got the whole world very excited a month or two ago. They thought, oh my God, we're going to be able to do 100,000 TPS on the layer 1, which will basically match what's coming from Firedancer, from Solana. It's like, why do we need Solana anymore? If this thing can do 100,000 TPS, everybody was excited. And I said, got to see it to believe it. Don't believe everything that you hear. So now, this is key. Sadly, excuse my typo, sad key. Sadly, they're being developed exclusively for layer 2 solutions rather than layer 1. And by focusing the MegaETH advancements on layer 2, ETH's core developers aim to alleviate congestion and high fees on the mainnet. Obviously, L1 is out of juice, out of bandwidth, and this approach leaves the layer 1 blockchain without any scaling improvements, and all the focus will be prioritization of layer 2s over layer 1s, and that is kind of weird. So putting the MegaETH, MegaETH to death, that's it. Now, third part. All right, the impact of not scaling the layer 1, I believe it's a competitive disadvantage because obviously the higher transaction fees and the slowness of the layer 1 is going to deter users and developers. Slower transaction speeds reduce user satisfaction and poor user experience due to congestion and efficiency. I tried. I still have some old wrapped ETH on a wallet. It's a hot wallet called MetaMask. I tried to swap it and get it off. I had about 10 or 15 minutes. I couldn't do it. I used to be able to do it in 2021. Now it's just so cumbersome. It's so tricky. And I've got extreme attention deficit. So it would be very difficult for me to sit there for 15 minutes trying to make something happen. So I move on and leave it there. So if anybody knows how to get wrapped ETH off my MetaMask, let me know. Anyhow, composability challenges, second part of the problem. Fragmentation across layer 2s complicates DApp interoperability. That is a huge issue. And difficulty in integrating new projects with existing ones, another massive issue. And no composability hampers innovation and growth. This is key. And you don't have this problem with Solana as well. Now, number 4, flawed data availability layer, the DA. You're going to hear a lot about DAs, this whole chains that are just focused on data availability. And ETH wants to be that secure DA layer for the L2s. And DA's role is to provide data storage and availability. And the mainnet remains less scalable, impacting DA layer efficiency. Just imagine for a second, Larry Fink, the Finkster, wants to tokenize a stock exchange or real-world assets like real estate all over the US or something like that using this. It simply can't scale. It simply will not fly. Even if you have the Ethereum data availability for the amount of transactions they're going to need to support every single minute of every single day, it's not going to fly. But there's another problem too. Scalable L1's advantages, these are other ones. They can capture higher revenue by processing more transactions. We've seen that happen over the last 6 months in a very big way. Higher revenue enhances security, attracting more developers and users, like a self-fulfilling prophecy. And unscalable L1 puts it at a disadvantage compared to scalable L1s. I always talk about it being a murderer's row. Not only L2s are a murderer's row of L2s, layer 1s are a murderer's row. It's literally, If you're not fast, cheap, secure, with a breadth of dApps, you're just simply not going to make it. It's that simple. Now, there is another problem, and that is potential abandonment by the L2 ecosystems. Successful layer 2s right now, designed to address the scalability, may eventually abandon ETH in favor of a more scalable layer 1. If ETH is not feeding them the revenue that they need to survive, or there's simply too much competition, they'll bounce. And they'll bounce to another L1 and try and make that scale. And this is a problem. This shift could result in a significant loss of activity and value on the Ethereum network, exacerbating its scalability and adoption challenges. A real big issue. Next, long-term. Okay, focus on long-term solutions. I know things are changing at the speed of light right now in this space, but Ethereum's long-term approach is, again, focusing on L2 scaling solutions, and they require multiple years to research and develop. As I said before, a new L1 could be spun up in a matter of weeks using AI and other technologies, picking the best of all the other L1s that are out there. The only problem is adoption. But for Ethereum to modify things, develop things, it takes years. We no longer have the luxury of waiting years for things to be developed. It's a serious problem. And short-term scalability improvements are often not prioritized. Obviously, it's like kind of changing wings in the plane. Then you've got the faster implementations from competitors. Solana focuses on intermediate, short-term, and all sorts of scalability solutions. You can see the speed at which they're spitting out product with very high product market fit that solves both scalability and user experience and is doing things the blockchain have never been done before. And also faster block times attract developers needing quick results, especially use cases, think tokenization of the world, and other blockchains adapt rapid iterative development cycles. The world is moving too fast. I've been saying this for years. I made a video last year about how old tech is dead. It doesn't work anymore. It's like vehicles. You now have a thing called dumb cars versus smart cars. A smart car is a car that drives itself. Everything else is dumb. Who is going to buy a dumb car? Maybe you need a flip phone or a pager if you're a drug dealer or something. Maybe you need a dumb car that can't be tracked. I don't know. But that's the only use case I see. But same thing happening here. Things are changing very fast. Also, the innovation on the layer 2s. The roadmap has caused a shift. Big shift in Ethereum innovation, investment, and adoption are happening on L2s rather than Ethereum layer 1. And we see that with the users right now. Like look at Base. Base does a lot more than ETH does, and it's brand new. The shift indicates that developers and investors see more potential and efficiency in layer 2 solutions, which offer faster and cheaper transactions. As we've been saying for years, better, cheaper, faster. That's the way to go. But consequently, the ETH L1 is being overshadowed as its high fees and slow speeds and slow finality make it less attractive for new projects and users. That is a real problem. Thank you, Timple. And this growing focus on L2 threatens to leave Ethereum's mainnet behind in a very, as I keep stressing, a very rapidly evolving place. This space is moving at the speed of light, ladies and gentlemen. Finally, that's 8 points. That's point number 8. Centralized decision-making and lack of on-chain governance. The Ethereum's decision-making heavily influenced by a small group of core developers or Vitalik writing a white paper over the weekend. The consensus mechanism and major updates often reflect the priorities of these central figures, and there's limited broader community involvement. And that is a big issue. You got people developing on Solana, and they're doing crazy crap like Jump.Fun, spinning out 20 million meme coins a month or something like that, maybe even more. Does Solana want to stop it? No, because it's a free chain you can build on. It's not controlled by a centralized group. We'll get to centralization in a minute too. But the governance piece as well, lack of on-chain governance. The absence of this leads to slower and less flexible decision-making, difficult to adapt to change the approach, and the risk of user and developer exodus from the Ethereum to more adaptive platforms. We're already seeing this happen at scale. And SEC is also considering consensus for probably some of these centralization reasons. Let's get into the data now that we got that out of the way. But those 8 points are all very, very scary in today's world, in my opinion. But there's more, a lot more. This is the detailed numeric quant face-off. That's all I do here, numbers. And I look for things that are cheap. Not cheap, I should say inexpensive or undervalued. Undervalued is a better term. So let's go. Let's talk about upside first. This is the percentage of market cap right now. This model runs in real time. The market cap of Solana is 16.6%, that of ETH. So if it does match it, it'll go to 602% gains from here after what we've already had 1,800% gains in the last 18 months. Easy numbers to remember, bonkers to think about. And the question is, what will ETH do? ETH ETF is coming. That's going to bring money to Ethereum, which will help increase that too. Therefore, this will increase as well. So lots of upside. Let's talk about centralization. ETH versus SOL Nakamoto Coefficient. And again, this is an API data feed from a very reputable source. ETH Nakamoto Coefficient is now 2. You just have to control 2 nodes to be able to control the entire chain. With Solana, it's fallen from 23 to 22. Now it's 19. That's also become very concentrated as some validators have grown very, very big, like Black Holes, friend of the channel, Mertz. Validator is now the 7th largest. So you just need to control 19 of those guys to be able to control the whole chain. But that's going to change with Firedancer. That'll enable a lot of people to be able to spin up their own validators very quickly as well. Now, let's talk about finality, ETH versus SOL. Talking about this a long time. You got to wait 360 seconds for finality on Ethereum. It's 2 seconds on Solana, and that is 15,000% faster. Max TPS is 45. ETH craps out normally at 15 TPS, whereas Solana has been driven up to 710,000. And that is 1.6 million% faster. So very, very different. I'll go through these very fast. ETH versus SOL daily transactions. ETH does 1.1 million. SOL does 42 million. And that is 3,600% more. Daily active users, 387,000 versus 1.448 million. That is 274% more. Again, all across the board, there was a time when one of these things might be a little bit close to Ethereum. Over the last 6 months, Solana has trounced Ethereum. Absolutely smashed it since last time I did this. ETH versus SOL, this is daily transactions over daily active users. The average user on ETH does 3 transactions a day. The average user on Solana does 29, which is 880% difference. Average fee, $2.78, $2.77 on Ethereum versus 0.0002 cents on Solana. And the SOL versus ETH FDMC over daily transactions, each transaction is worth $358,000 of market cap. Think about that. One transaction on ETH represents $358,000 of market cap, whereas on Solana it represents $2,000. Again, 17,500% better. FDMC over daily active users, 1,700% better. Bonkers. Each daily active user on Ethereum is valued at $1.069 million, whereas on Solana it's valued at $59,000. And Solana beats ETH and DEX Volume. Again, this happens a lot, but this is just another news. Again, it's 16% of the market cap, but it does way more. And I know all the layer 2s are on top of ETH, but even when you aggregate them, Solana still does way more than all of the L2s plus Ethereum combined, which is mad to think about. SOL also beats Ethereum in NFT volume. Again, this is 2 hours ago, $6.93 million versus 4.28, which is crazy. And look at nearly $1 million of wash sales as well on Ethereum. Let's look at other things as well. What's happening with Solana? People thought Solana would never be able to make it because the fees are too cheap. Well, Solana, just this from Dan Smith, by the way, Solana just printed a new all-time high in monthly economic value. That's called MEV, by the way. It's fees plus MEV is monthly economic value. And it's now at $1.1 billion annualized. But all the growth really has happened since April of this year. And now it's exploding in popularity. Another view of where these fees are actually coming from, the breakdown, it's still cheap to use. But a lot of people need to get stuff done, so they do tips. MEV tips are there, and also priority fees, especially for traders. I personally pay for priority fees as well, and that helps the business too. So let's look at this thing. This is very concerning too. As we go forward in the future, ETH TPS is 15. They will not scale the layer 1. They've decided to abandon that idea. MegaETH, MegaETH, dead. Solana, what's very interesting, currently up to 5,000 TPS, going to 10,000 TPS gradually over the next few months, then 100,000 TPS probably by the end of the year. And potentially, if Firedancer pulls it off, they could hit 1 million TPS in 2025, while Ethereum runs at 15. So that's not even comparing a snail to a Bugatti Veyron or a rocket ship. It's that far apart. And there's other good stuff happening. The adoption is now going mainstream. PayPal stablecoin is going live on Jupiter, not just on USDC, but also on Jupiter too. So the big TradFi players are going deeper and deeper into the Solana ecosystem, which I find very interesting. And by the way, there's other stuff happening that you don't get the benefits on other chains at all. This is becoming a bit of a Solana show now, but I've been urging people to always vote on Jupiter. And it pays. The Jupiter Exchange plans to distribute $60 million in ASRs, active staking rewards, to those who voted on DAO proposals over the last 3 months. I voted on them all. And I have a bag of Jupiter, so it'll be interesting to see what that reward is too. And Raydium now supports Blink. Last week I did a video on Blink and how it's a game changer. Nowhere the chain does this, but now Raydium now supports Solana Blink creation for all assets, where you can very quickly, rapidly, in a second, create a link, stick it anywhere, people can click on it, and done. That's it. One step, and you're good to go. And there's also some other good things happening in the space. The airdrop from Jito Labs brought the spotlight to liquid staking on Solana. Liquid staking has been big on Ethereum, but now liquid staking is coming in earnest to Solana too. And the rate of growth has been astonishing. And Sanctum is able to take the torch. They're launching Sanctum Reverve, and also they'll bring about a Cambrian explosion of liquid staking to the sector on Solana. And the ticker for that is Cloud. I think it's available on whale markets already. I don't own it, but again, this whole area is exploding. It's also, when you talk about liquid staking too, it's very well distributed, very nicely diversified. Here you can see Jito and I can't remember which one is number 2. Jito is number 1, and I think Marinade or MSOL is number 2. I can't remember the green. I can't remember the colors. But anyway, there's lots of mix of players. It's not like Ethereum was all one player. Solana has a lot more diversification, which is good. In addition, Pump.Fun, one of the tokens that's making a ton of money, the whole chain's making a lot of money. And that's what drives adoption. It brings in the developers to build stuff so they can make money. If there's no money to be had, like I mentioned before, with all the changes happening on Ethereum, it makes it less attractive for people to come over and build stuff. But this is Pump.Fun. The revenue is exploding as they're pumping out meme coins. The aggregate revenue now, over 3 months, or less than 3 months, is over $52 million, which is massive for a tiny chain. And as I mentioned before, PayPal stablecoin is live. And then the big question, I covered this last week, the ETH ETF is coming. And I'm getting to the conclusion, don't worry. It is coming. It's going to be big. We do have to get rid of the overhang of the Grayscale Ethereum ETF. I think there'll be a lot of selling out of that once this happens. It's probably coming next week. But the upside for the ETH ETF, by my calculations, through 2025, will be between 72.4% on the price of ETH to 180%. So that means, maybe a doubling, maybe a little bit more. Will we get to 9,000? I don't think so at all. But the upside for the Solana ETF, which will come probably in 2025, will be a lot higher, because I do believe the money that will float into the ETH ETF will eventually pivot over to the Solana ETF. So if ETH gets 5 billion, expect 5 billion to go into SOL as well. And in terms of, I do these things on Twitter just for fun. I compare Solana to every other asset, every major asset there, like Bitcoin and Ethereum and Avalanche and you name it, Matic, Polkadot, Chainlink, and every day it outperforms everything. And I just thought that was super interesting. So let's get to the conclusion, all right? The serious part of the show. Is ETH dead? And I think no way is it dead. Is their strategy off kilter? I think yes. But maybe it's the only escape route for them, i.e. they can't change the wings on the plane while it's in the air. You simply just can't do it. Therefore, they're putting all their efforts into the layer 2s. The second question is then that I always get, will ETH outshine, or will Solana outshine ETH in the long run? The answer is absolutely. It does a hell of a lot more, like I've just illustrated, at a tiny fraction of the price. And it has way more applications, way better user experience, way more flexibility, and driving way more adoption as well. So is ETH overvalued? One thing I will do in the future, probably next week, I'm going to aggregate all of the transactions, all of the users, everything across all the L2s on ETH, add them to ETH, and then compare them to Solana and see how it shakes up and see how much value is captured across all of the chains. But I did that last year, and I was surprised how little extra value was actually captured by these other chains. You know, Arbitrum makes good money in a good day, but still nothing like the money that's even made on the Jump.Funds and other things these days. So let's look at one other chart. This is the SOL ETH on the ATR. You guys like technical analysis, and this doesn't even include going back to the very bottom of the bear when Solana was in the toilet. This starts the clock in January 1st, 2023. Solana has outperformed ETH. Even though ETH has had a good run over the last 18 months, Solana's beaten it by about 500%. And right now, we just peaked above level 5, and we're heading to level 6, which means we'll be breaking a new all-time high, I believe, very soon. That will be when Solana gets to be at least 20% of ETH market cap. Hopefully, the ETH ETF will pump ETH a bit, and this will float our boats here too. So Solana still remains the black hole SOL for us right now. There's nothing else like it, and that's just fact of life. A lot of people say, oh, this chain does this, and this is this. No. We have all the data. We check it all the time. So let's continue to ride this horse and see how it goes. Thank you all for coming. I hope you enjoyed the show. A lot of detail. And I lost my voice. Thank you to the 6,500 people watching live. I appreciate you all. And again, it's not bad news. The truth is, Ethereum is less risky, very well adopted, very established. But is it going to cut it over the next 3 to 5 years? The answer is I don't think so. I think a murderer's row of layer 1s will eat it alive. And we're already seeing that happen. Thank you all for coming. Hit the like on the way out. And thank you as well to TND Tezza and Sean Donnelly. And I'm going to stop now before I burst a valve in my throat. Thanks all.